Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Chahine.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Chahine and Dennis Dick. On the show today, we are talking about this trade war. Seems to be never ending. Every day there's headlines on this trade war, so you never know when it's going to move the market. But I guess when you have a threat of $200 billion in more tariffs, that'll kind of move the market. So we're going to talk about that and the market's reaction to that headline last night and this morning. Not a ton of individual movers, just kind of trade war is the theme of the day. Nick Chahine will join the show. He's our guest today. He'll hop on at 8:35 to talk about the biggest options trades of the day. Joel, why don't you pull up your charts for us and show us what the S&Ps are doing and how they reacted to the headline of that trade war news overnight.
S&P futures trading down 29.25 handles at 27.50. Your pre-market high 27.80.25. That was just a couple ticks above your closing price of 79.75. Your pre-market low 35.75. Boy, that takes us back to some levels we have not seen since June 4th, when we had a 27.33.25 low. We are now on the rebound here, though. 27.51 is where we're at. Maybe we'll take a look at mid-range on the session, 45-point range. That would put us back up 56, 57 area, not far away from that. The news is not good for crude oil as well. Crude oil futures are trading in the red here by $1.10 at 64.59. Clinging to support here. We do have the low of the move in the lower 64 handle. No flight to quality in gold, though. Gold down $6.50 at 1273.60. And you have silver in the red. Boy, wasn't silver just at $17 a few days ago, but now down 20 cents at 16.25. And is Bitcoin coming to the rescue? Bitcoin moving fractionally here, bouncing off that $6,000 level. 61.35 was the low of the move. Dennis, some great trading action for you last night, but it was one of those scenarios where it was too good to believe. Walk us through
a little bit. And, I was talking in the chat last night, we got lots of good traders over there in the chat. And then I kind of just taking it easy after 7 o'clock. I was in and out, I go and I play with my kids a bit. I come back to my computer. I'm sitting down I'm actually sitting at my desk at like 7:35. I'm watching the headlines go by and I see trade war headline, but you don't think much of it because there's trade war headlines all the time. So, we've been talking about it a lot. Then my buddy messages me and says, new tariffs. And I was like, wait a second, new tariffs. I'm like, whoa, 200. Was it 200 billion, Spencer? Is that what they announced? Give us the news and I'll take you through my scenario.
All right. Yeah, 200 billion is the new number or the number on new tariffs that we are supposedly going to impose or threaten to impose on China in reaction to their reaction to our tariffs from a few weeks ago. So yeah, this trade war, and Beijing is saying they're going to hit back again. So trade war is happening. It looks like, although at this point, all anyone's really doing is it's a lot of threats, but I don't know.
So I'm looking at that, and I see that headline, and my buddy messaged me like, whoa. So then I start hitting, the S&Ps, and it was actually still flat, which was surprising. Then in the next minute, it starts to sell off. We started to sell off pretty hard. And then it's like, okay, well, you're trying to, I actually had it in my head already. So I'm positioned wrong because I'm coming in and I was saying, I even tweeted it out. I was like, yesterday was a victory for the bulls. I know the indices were down, but you had a risk on day because you had a lot of consumer staples, defensive stocks getting hit hard. You had money flying right back into the IQs, right back into the drop boxes, right back into the high flyers that they've all been flying into. I mean, they were flying into all tech. Google was up $20 yesterday. So, you really had a victory for the risk on traders, the risk on bulls. So I had that in my head that, okay, I think the bulls are back in charge here. We're probably going to be up here today. And I'm long. So I'm like, all of a sudden, I see this tariff thing. I'm like, this is not good. I'm like, abort mission at 7:45 last night, abort mission. And so I'm starting to try to sell all my longs to get out of, the stuff that I'm in. And, I'm obviously trying to get short as well. So I was able to get out a lot of the stuff and, in that last 15 minutes before they closed at 8 o'clock. And I obviously got short some of the market too. So, S&P short. So it worked out for me. And I actually came in today short now. But, you got to be able to change on the fly with the headline. If you just got in your head looking at technicals and, you're not ready to, utilize any other market information, you get hit hard here today. Because you look at all those stocks now, like the drop boxes, trading down 2%, the IQs trading down 2.8%. I mean, I was positioned long on some of these things, some of these high flyers, because I really thought, other things being equal, if we went and had a tariff headline, I think we would have been up today. But the tariff headline changes everything. So now we don't know how the market's going to respond here coming up, after 9:30. Maybe they're going to be the buy the dip market here again. But you've got to be ready to switch very, very quickly, and that's my point.
And what do you think? You think there's some programmers cleaning out their desks today, and they're like, tariff headlines, how did you not hit the sell button? I mean, there's just been so
how
many.
Those algos not hit the
how
sell
did the
button?
algos missed it? That this could
what
be.
What do you want? And I was saying that, Joel, in the pre-market show, that you can't really program an algo for a tariff headline right now, because as a tariff headline, it seems like every 20 minutes breaking, somebody's talking about it, somebody's writing a story on potential tariffs, but it's not from, Trump saying it's going to be 200 billion more. So difficult thing to write if you just had an algo written on that. So the algos were not hitting it on there. It did not go down for like a minute or two until after the actual news broke of the 200 billion. It sat there for a little bit. So it was human beings that were actually hitting it. It wasn't the algos profiting from this one last night. Because difficult thing to write. I mean, you have a company beats earnings, you can program that in pretty easy. You have, a major headline come by, you can program that, but there's just so much talk about the tariffs right now that even me, I looked at the headline, I visually processed the headline, and I still didn't really, because you're reading a million headlines, you're doing a bunch of things at 7:30 at night. And, I'm looking, and I didn't really sink in until, whoa, these are 200 billion more. I'm like, whoa, hit the sell button. So it took me a minute. So your algos were just out to lunch on that. No algo hit that last night because it was way too slow of a sell-off.
Yeah, and well, I'm glad that it happened for you at 7. Between 4.
When was it? When did the story actually? 7:30ish, 7:32, Joel. Spencer.
It was around there. It was. I don't
just
know,
after 7:30.
I don't have the exact time
Eastern
for you, but it. I know it was around there.
And normally on this type of stuff, it's hard for a human being to come in, because when you get a major headline, it often is how the algorithms will hit it down, especially intraday. I mean, the algorithms are all over stuff like this. But at nights, it's not quite as many algos running. But it's not only that. It's just the fact that, tariffs are in the headlines all the time. So it'd be tricky to write. Like, I'm trying to envision how to actually write a headline, in an algorithm to capture that, because you would be hitting bids all the time, because there is constant talk about tariffs right now. So, it's interesting. I mean, maybe there's some really smart programs that can do it out there. I'll tell you, none of them were running last night, because the S&P sat there for a minute or two, and they would not do that if there was algorithms that had that programmed in.
Dennis, what about, I mean, you do have the market, you do have the soft. I mean, is there any coincidence that this comes after like the triple witch and quad witch? We were talking about this at the end of last week, how a lot of times those expirations, signal like either a strong resumption of the trend or a turning point. I mean, can you argue or not argue that, albeit without these headlines, we may be down anyways? I know you thought we had a strong close yesterday, but just looking at the S&Ps and the resistance and a lot of these indexes just put in, look at that. I mean, how many times do you see 4 or 5 tops in the same area, near a nice round number like the 2,800, IWM. Now it broke out yesterday, but it's back down again today. I thought I saw the Qs kind of doing the same thing. So I don't know. I mean, yeah, the tariff headlines did it. We did recover from yesterday, but we got to focus what's going on today. And let's focus on some of the movers.
Before I just want to answer your question,
sure.
And I would say no. I would say I think we would have been up here today, because just for the same reasons. Yesterday's trading action was, I got caught on the wrong side too. I was thinking, I was buying that argument yesterday. And I was saying, I think, these defensive stocks, value stocks might, actually continue up here a little bit. I was thinking also, some of these tech stocks, maybe it's time to book some profits in some of these high flyers, because the trading action from yesterday morning before the open was dictating that. It all changed after 9:30. You literally saw most of those stocks that were down, like the drop boxes and that, just start to catch bids once again. And you've got to be able to change very quickly on the fly. Like, I was positioned very wrong after the open. I bought defensive stocks. I ended up buying Mo right at the high of the day because I thought, they're maybe going to catch a bid. It went straight down after the open. I ended up buying Procter & Gamble. It went straight down after the open. What do you do when you're positioned wrong? You act quickly and you minimize the damage. So many traders, and I'm telling you, not so many, I'm telling you 90% of traders out there will sit there deer caught in the headlights and be like, oh, okay, I don't know what to do. I'm losing some money here. I need to try to, get this money back. Stop thinking about getting your money back. You made the wrong call. Start thinking about how to minimize the losses you're going to take. How do you minimize losses you're going to take? Take the loss. You're wrong. And I admitted I'm wrong right away. How do I know I'm wrong? Right. I start losing money. I knew 1 minute after the open, I'm like, they're not buying these value stocks because they're not bouncing. So what do? I immediately cancel any open order for any value stock that I have out there. Get the hell out of those orders. Don't put on more of those trades because you're wrong. And now start, hitting and getting out, or potentially hedging yourself, or just getting the hell out. So that's the whole reason why I've been in the game 19 years. I'm able to switch my opinion very, very quickly. As a day trader, you have to do that. As a long-term investor, you don't. You can ignore this type of stuff. You can ignore the headlines. Maybe you're coming here and buying some of these stocks like the IQs and stuff today because they seem to just bounce back. But as a day trader, you've got to be able to switch your opinion quickly, because when it turns, it can turn hard and it can hurt you bad.
Yeah, those opens can be very, very good, or they can be very, very bad. It's just those, and there's not a lot of liquidity off the opens too, because there is risk, as Dennis witnesses here, and the algos they wait. They'll let Bank of America shake out for a little bit, and then come in when there's more orders to lean on here. But
they don't make markets. I've written articles about this. You can Google me, and different articles I've talked about. Your high frequency traders aren't making markets. They're making markets, but they're making them very wide at the open. Why is that? Well, their average profit margins are less than a penny. They can't be going and losing, 20, 30 cents on, some of these stocks here that, opening up and they have a 20-cent spread. So when it's a 20-cent spread, they're sitting out 30, 40 cents. They're not participating as much in the open as you think. They come in when it starts to slow down, when there's orders to lean on, like Joel was just saying. High frequency trading, all it is leaning on orders. That's the entire thing. I mean, there's going to be some maybe market, structure people that'll argue with me, but you can look at any of the high frequency trading strategies. How do I know that? We were high frequency traders. I mean, we were running algorithms back in 2000 before high frequency trading was even a word. So it's all our strategies just sped up. It's all it is. And it's all leaning on orders. We used to lean on institutional size. We used to lean on orders. Now they lean on all orders. You put 100 shares out there for a bid, you have you see 500 shares join you. You see another 500 penny jump you, and you see a bunch of off-exchange market makers trying to step ahead of you as well with their sub pennies. So I mean, it's just the name of the game is leaning on everybody else. They want to minimize their damage. They can't put an order out there if there's no other orders, because they need to have an out. They are looking for that out. So once there's an order sitting on the book, now they have an out. Now they can step ahead of your order or penny jump you and get a free look at the upside, and the opposite true, obviously, too. If they got sell orders out there, then, they get a free look at the downside. They're leaning on orders. All the strategies, market making strategies, all the same thing. They're all leaning on orders. Even in your arbitrage, it's the same thing. They're leaning on an order, maybe in another vehicle, but they're leaning on something. That's why we get these flash crashes, because when all of a sudden there's no orders out there, high frequency traders say, I can't put any orders out there either. And there's a vacuum. There's nothing in there because nobody else has the guts to put an order out there either. All your market makers lean on everybody else. That's the way it's done.
Okay. All right. We are moving in here. It's coming up on 8:17. We got to cover some stocks here. And boom, boom. I mean, not that this, I really think there's a chance of this takeover happening here. But GameStop in the news.
I think there's a chance that this happens.
You think so?
Yeah. This is one I've been wondering about this one for a while now, because it just seems like almost the perfect opportunity for like a PE takeover. But the company did confirm this morning that they are exploring talks with third parties for a potential takeout. I had tips of Reuters, who had this story yesterday afternoon. This is one I've been wondering about, just because, I mean, how else are they going to survive? Everything is moving towards a subscription model. This is a company that made last quarter, they made 25% of their sales from just selling pre-owned products, but you can go to Amazon for that, or eBay. You don't need to go to GameStop. I mean, this seems like it's definitely in play, definitely likely to me, possible.
Yeah, and this is they want to put themselves in play at least, and I agree with you, Spencer, because they're selling games. Everybody is in the business of giving the game away now. That's the biggest problem for GameStop. As a standalone store, I think it's got a whole lot of trouble, because the products they are selling are being given away. I mean, that Fortnite, that game is free. The games are, Candy Crush, all them, you get the games for free. The people are making the money. That's the way it's going. All these games eventually free. And they're making the money off the skins inside the game. Also, upselling you, doing different ways. So the games are basically going to a free model, free video games to play. And it's hard to be in a video game store business selling games when they're giving them away.
Well, for the games that aren't free, every certain game company has a subscription model now. EA, Sony, you pay a flat fee, you get access to their whole library. I mean, GameStop. I'm looking at GameStop's sales breakdown for last quarter. 2% of sales were digital, online sales. 2%. That's not what you want to see in 2018.
No. Not at all.
I mean,
so warning to the buyer here, if this does not get bought, this is still the dog of all dogs. So yes, warning to the short too. I mean, maybe somebody potentially comes in, figures out a way to, to clean this up and, actually make money with this business. So, it sounds like they're in talks, but we've seen stocks in talks before, and we've seen, nothing materialize and stocks eventually drift down to where they came from. So it's $13. I think as a standalone store, if this doesn't, get bought by somebody else, I think when we look at it 2 years from now, it's single digits. So just be careful. If you're buying it here, I think you're just banking on the potential that somebody might acquire it. It's possible, but it's a little bit of a short squeeze play too, because the short interest is, I think, pretty high in there. But I think long term, they've got a lot of figuring out to do at GameStop.
And takeovers don't always have to be at higher prices, right? They can there's sometimes
we've seen it.
Yeah.
We've seen it happen.
I mean, they could come in and say, yeah, we'll pay $12.50 for this, or $13.
Which stock did that just do that in? Like 6 months ago, Joel? You have the memory. Which one was that? Remember, it was way up as 195, and they bought out for 185, and the stock was like 184 the next day, and it's like, wow, it was a take under. Remember? Maybe the chat. Maybe somebody remembers. I remember.
It was that one crazy stock.
It was like 100. I remember it was like $80 or 180. I remember the 80 and something with 80. But Spencer, you remember? You got the goldfish memory. Like,
no, I'm looking at the pro for take under.
It was, they had some kind of. Is this the one with the satellite rights or something like that? And
I just remember that was the last time I remember a take under. You don't see them that often.
I know. I don't know.
That just gets me, like, when I Google that, all I find is funeral stuff.
Okay.
You don't want Google knowing what
the Undertaker.
So now that means not
WWE. That's a nice tangent.
For the next,
so I Google take under. Now I'm seeing the Undertaker, and now I'm at WWE.
For the next 2 days, you're getting funeral ads on every website.
Yeah.
Every website you visit, you're going to get ads.
They think somebody's died in my family, and I got pop-ups happening on my Twitter account.
Yep.
Do you need final arrangements?
Yep, that'll happen.
All because I wrote in take under into a Google search.
It's going to happen. That's how
it's smart. Spiders are smart.
I don't know. I don't know how I shouldn't have said a take under on this one, but anyways, if you're trading this, it's down 10 cents over the $15 hurdle. Had a little pop here. Someone got a little excited around 8:15. Some volume traded when it traded up to 15.75. But just take a look at your dailies here. and multiple highs at $16. So if you're trading this technically, you want to see this rally up, take out that high, get over $16. If not, we could do some backing and filling here. And, you want to see confirmation on these things. Trading even below the close. The close is 15.20. Trading down a dime here at 15.10.
Let's jump over to individual stocks that are getting hit on the tariff news, and we're going to go Caterpillar and Boeing, both of those. Kramer did a nice little special last night, and perfect timing, I got to tell you. Sometimes I don't appreciate what they do, but I do appreciate sometimes what they do. Whoever's on this was all over it because he was saying potential stocks that could, be in trouble in a potential trade war. His number one and number two stock, Caterpillar and Boeing. And you know what? You look at those two stocks today, they're getting hit pretty hard. Caterpillar's trading down $2.50. Boeing is trading down $7 here right now. So trade war fears here knocking these stocks down. Maybe do a quick tech on those two stocks, Joel.
Okay, the cat here just took a little plunge here. Just made a pre-market low at 145.05. Now this was selling off after expiration, anyways. Filling a gap here. I don't see anything. I don't see anything at 145.05. So that stands itself as a number. You had a gap up that was probably after earnings. We got a gap between 47.19 and 48, but 41.05. I mean, I'm just going to look at the lows. That was the May 4th low. Don't think we're going to see that today. I'd be looking at that pre-market low and then using half and whole numbers after that. And then you said deer. Did you say that was the other one? Cat.
Well, I would say deer too. I said cap, but I would say deer as well.
Okay.
That one falls in the category.
All right, deer.
These are stocks. You want the stocks that Kramer gave last night? And,
sure.
He does his homework. He's got the editors behind him. So I'll just grab it here right now. So, wait. I saw it. Actually, I like the tweet. You know what I do sometimes? I like tweets because I want to go back to them. So I liked this tweet last night. It was Jim Cramer's 12 stocks that make up his glum index. It was kind of a weird segment, but at the same time, it was like, oh, he's talking about stocks that are going to get hit in a potential trade war. I was like, oh, I like that. Kramer doing the homework for me. So he had Caterpillar, Boeing, 3M, General Electric, Johnson & Johnson, Citigroup, Goldman Sachs, Lennar, Walmart. And I don't know why he came up with these stocks, but this is what he came up with. Ford, Gilead, Celgene. I totally get the Caterpillar and Boeing, but I think it's a matter that they're just, such large, multinational corporations that, they get, they're going to get hit. 3M, I kind of get too. You start to reach a little bit with J&J. I mean, it's consumer products. It's somewhat defensive. So I think he's reaching with that one. GE is just the eternal dog anyways. I mean, it's probably down 15 cents today, no matter what. Walmart, big multinational, Lennar, your home builder, Ford, GM, I kind of get to. We're getting hit. And they are getting hit here this morning. So those are stocks they gave, and those are stocks, actually, some of those are getting hit pretty hard this morning.
I have a list that are not going to do well if there's no tariffs, and GE's on there too.
I have a list that's, stocks that aren't going to do well, period. GE is on the list. GE single digits. I don't have to talk against my book anymore. I just have to talk against Spencer Israel's book.
That's a small book you're talking against.
Yeah. It just kind of, hats off to Barron's over the weekend. They were talking about, they got a new guy replacing Steven Sears. I cannot pronounce his name, but, stocks with potential are, if you want to protect yourself, and, the XLI, the Select Spider Industrial Spider Fund, was something that they mentioned buying puts on. So hats off to Barron's, a good call.
Industrials get hit harder in the trade war for sure. Agree with that. If you look at the DIA, 1.22%, it's down. SPY is only down 0.91%. The industrials get hit harder. But also in the Dow, you got Caterpillar and Boeing. That's not going to help. So something to think about.
Okay. All right. Let's move on. S&Ps are trying to rally. We're in the 2750 handle. We are now down only 2850 at 51.25. I'm looking to see us come back up to mid-range here. 2758. That was your mid-range in the session. Your high at 27.80.25. Your low at 35.75.
5 minutes before imbalances, we want to give you those hot off the presses because they are going to be interesting here this morning. But let's go to ratings first. We've got 3 or 4 that are jumping out at me. One that really jumped out at me is INTU. It's getting upgraded at Stifel. They're throwing like a 240 price target on this thing. It is trading slightly up here in the pre-market, but if it could get above 210, it would be in total breakout mode here. It was trading up over there last night. Now the trade war has hit it back down, but if you're looking for one that could be a sleepy little climber here on a bad market day, I think this INTU at above 210 could start to break out.
Yeah, boy, you really got a boost off that originally. 2,200 shares traded up. No, that was last night.
Last night.
Okay.
At 212. You know what? It would have opened over 212, though, if it would have been a flat market, because it's a pretty bullish call by Stifel, who is pretty influential. But now everything changes. You get the markets down, and what do you say opposite to a rising tide lifts all ships? A flooding tide sinks all ships. What would you say? Is there a saying for that? When the market's going down, that it brings everything down with it?
I don't
know if there is one. We should invent one right now.
I'm thinking of one. Maybe you would say
New Orleans is sinking.
You would say a low tide brings all ships out to sea. I don't know.
I like that. Wow, man, this was
anyway. So it's being brought out to sea by the overall market. It would be up right now if not for the overall market. It's not like GE.
It was forming some major resistance at the 209.5 area. Stuck over 210 yesterday, 210.19. So if it still pulls back, well, it's up a dime here. So now the fact that you have the negative market and you have the upgrade, let's see what happens. If it could take out 210.19, that was the all-time high. That was made on Friday. 209.16, that was your all-time closing high from yesterday.
Also getting upgraded here, the Verizon, upgraded by Deutsche Bank. And don't call it a comeback, but Verizon is actually trading in the green here today. So here's a stock that's upgraded and is in the green. A little bit defensive. AT&T as an interesting chart, which we're going to talk about in 2 seconds here. But Verizon trading up. Thoughts here on V Zebra?
I was gonna bug you over the weekend, and I'm trying to think of a spread.
Bug me every weekend, Joe.
I know. I don't want to. I don't know. There's got to be something. Have you watched the historical spread between T and Verizon? Have you followed that ever?
No. They do trade closely together, though.
We're just getting
in the long run.
We're gonna have to talk off air about this because there's a play here. There's a play. The AT&T right now.
We'll talk on air so everybody else can participate as well.
I don't know. I think there's gonna be a big winner here and a big loser here. And
a bold call.
Yeah, I mean,
maybe it's Verizon because they don't pay ridiculous amounts of money for all these other companies.
Okay.
DirecTV, that DirecTV purchase.
They just paid a ridiculous amount of money for Yahoo.
Yeah, what about that?
They just bought
Yahoo. Actually paying money for Yahoo.
Exactly.
Yeah, you're right.
And they bought
who pays $4 billion for Yahoo old assets, and they let the Alibaba go.
And they bought.
You're right. Take that. Strike it from the record. All these big companies acquire things at ridiculous prices.
And they bought AOL too. A while ago.
Was it Verizon that bought AOL?
Yes.
The leftovers, but maybe they're just going to the scrap heap, and they're trying to pick out something that they can actually use, as opposed to AT&T that likes to pay top dollar for everything. Okay. I like Verizon better too, Joel. Okay. I think Verizon.
Even though I have AT&T service.
Yeah, I have AT&T in my portfolio too. Talking against my buck again. I had to sell, so I don't have to talk against my buck anymore. What was AT&T? 4 lows in the exact same area where they're again here right now.
What do you think?
That's a just setup.
3202. You probably like Rogers. What's the symbol for Rogers Communications?
You know what? I have Rogers. It's RCI. RCI?
Is that it?
RCI.
Yeah.
It's RCI.
Yep.
I have Rogers. They're okay, but I fight with them too over data and stuff. It's like, I'm a mag over on my and then they want to bill me for it. Then you got to call up and complain. I guess that's like with all of them now.
Okay. What about here? Did we pass the 830 threshold here?
Right now, Alibaba, 186,000 to sell. That is significant. GE, of course, is a sell and balance, eternal sell and balance. 95,000 shares to sell GE. Twitter, 49,000 to sell. Banks to sell. I don't really see hardly any buy imbalances at
one
all
buy
here.
imbalance?
AT&T, 69,000 to buy, but not sure it's going to matter. Verizon, small buy imbalance, 26,000 shares. You know what? The only one really jumping out, Square, 44,000 to sell. That Alibaba sell imbalance is big. That stock is down huge here this morning, 203. I guess, you think about China stocks, maybe they were the direct hit. We didn't, we were talking Caterpillar, Boeing, but China stocks are really getting hit harder here this morning on this potential tariff news. Baidu is down 2.84%. Baba is down 2.62%, which is almost 3 times the market. So I guess that's, where, ground zero is for this tariff stuff to a certain extent.
Yeah, let's take a look here at Alibaba here. And boy, I'm getting some spotty data here on my trade station, but anyways, you had a low in the 200 handle, or just above 200. You had a low at 200.43. That's still $3 away. It's down $5. I don't think you'll get to see that today. Of course, coming back on the upside after being down $5. You love to see that closing price of 208.57.
Also back to ratings land, which is where we were before. First Solar catches an upgrade, Joel. Look at this. What's the first upgrade for Solar in a long time? It's still trading down, but it catches an upgrade to neutral Credit Suisse. It did bounce off that 50. I was talking about that $50 level. I think above, as long as it holds 50, you got a shot here for a bounce here. I mean, first time down here, it got down there 2 days ago. Maybe it can bounce out of here, but definitely not a nice tape to be in. I think it would have been up $1 here this morning if not for the overall market. But thoughts on First Solar as we do bounce off 50?
It is still trading in the red though by 23 cents here at 51.60. Let's go to your daily charts and see what we can see from your dailies. You did hit on the daily chart. You hit your low at 50.23 yesterday, 50.55. So there's your double support that you talked about. Let's see what we got on the upside. Well, first you got to get green on the session first. And that close was at 51.83. I mean, see what happens. Look at your highs. It's they've come down. Your daily highs have been down 4 days in a row. So if you could break that string, get above 52.50, you have some room up to 53.50. But once again, you're kind of looking at a negative tape here. So we'll see what happens. But I like it though, from a long-term perspective at $50 holds.
They've had a couple upgrades this year though. First Solar, they got upgraded at Bank of America, who since downgraded, and they got upgraded by from JP Morgan, who is not downgraded since then. That was a month ago.
We're due for a JP Morgan downgrade.
Maybe
they play catch up. Gordon Johnson, obviously bearish. That's why I was going to buy this thing at $50. I did not, because Gordon Johnson came on our show and was bearish, and he's my solar guy. I just blindly follow Gordon Johnson because he's usually right. He says going $43. Maybe that's where I'll put my bid. Although you had him on the ropes there a little bit, Joel, when you were talking long term. You got him thinking. A bit, because he is, he's not afraid, to call stocks short term too, and he's kind of wild with his ratings sometimes. So, or all the time. So, but you had him on the ropes. You started talking long term. You're like, don't you think long term, something like this? People are going more green. First, I'm playing First Solar, and he's thought it for a minute, and then he said, I don't know. So you had him on the ropes.
Yeah.
Not a lot of people get Gordon Johnson on the ropes. He's a pretty good speaker.
Okay. All right. Well, we'll see what happens here. A lot of ground to make up here for Solar. Is it lifting any other Solar? I mean, what do we?
No, there's nothing lifting here.
No.
The only thing. Okay, so I'm looking at my screen here. I literally have 200 stocks on my screen right now that I actively follow, and I'm not talking small. This is because this is more S&P stuff. Verizon is green and Colgate is green. That is it. 2 stocks out of like 200 that I'm looking at here right now are green. Verizon is green because it got upgraded. Colgate is green because they announced a $5 billion buyback last night. Those are the 2 stocks that are green. That is going to change. There is going to be some winners here today. There's going to be some massive losers here today too. I don't know what that's going to be yet. We usually get more information after 9:30 when we start to see the trends come and start to form. But 2 stocks that are green here right now are only Colgate and Verizon. That is crazy.
Okay. All right. It is now 8:35. 8:35 on Tuesdays. We bring in Nick Chahine. He's the author of Create Incomes with Option Spreads. Joins us with his fundamental and technical outlook on the market. Nick.
Good morning.
Nick, you just must be happier than a pagan slop here with all this red on the screen. Can you just stop yourself from just buying every offer in sight?
No, but I am happy that we picked the good levels and we monitor. Like last week, 2755, I expected was the downside, and they fell short of it. Yesterday, I said that I wouldn't be surprised to see 2738. I think this morning we saw 2735, 36 or something in the S&P E-minis. So this is not out of the normal. I mean, we fell from the all-time high basically in the small caps and the NASDAQ. So it's not the end of the world. This is a reaction to a headline that we've seen before. Also last week, we saw retaliation, and I said we have another step, which is the retaliation of the retaliation. So here it is. This morning he delivered, but I'm not sure. Is it 200 billion plus 200 billion? What happened to the other 100 billion that he didn't use from last time? So it's just it's a lot of money. That's all. I expect a trillion word at some point in time. So we're gonna hit you with a trillion. So he's playing
the trill word. Oh,
No.
you heard it here first. I'm Benzinga's pre-market prep show. Okay. A trillion.
Nick,
go ahead, Dennis.
Nick, just give us the overall thoughts here. I mean, it's funny. This market is so much rotation here. And yesterday took me a little bit by surprise too, because it looked like it was going to be a weak day. And if you look at the indices, they still were down. But there were so many stocks that were so strong yesterday, especially your tech stocks. I mean, Google had a great day yesterday. It was up over $20.
I should have booked my profits on Google yesterday. I bought a call in the morning. It was up basically a nice car payment in a few minutes. I should have said, you know what? Thank you very much. I'm out. But I stayed in it. So
yeah, like those were huge moves. Do you think you should be a buyer of the tech on pullback here? Like you're going to get another shot here today. We were strong yesterday after, it looked like it was going to be a week open. They bought tech. Are they going to come in here? We're going to see a replay where they're going to come in here and buy tech again? Because, I mean, really, when you think about a trade war, tech is probably not the first thing you think about getting hit, besides the Chinese names.
Right. But this is a headline that
brings everything down.
Yeah, its sentiment gets hit. Everybody, the malaise, but then the math hits the Dow, and the media doesn't do us any favor because they're in the business, which is understandable, of selling headlines, right? Nobody's going to read a boring headline. So when they're covering markets, if the Dow is down 200 points and the IWM is flat or green, they're not going to say, hey, we have flattish markets. They'll say the markets are down this much, but it's a matter of math. So because the Dow is in the line of fire. You've got Boeing, which is probably the biggest guy on the Dow. It's down, so it'll drag the average down disproportionately. So you have to pick rabbits and see what represents real fear. And yesterday, we saw the grab, like you said, for perceived froth, trashy stocks, so to speak, like things that don't make money. And that tells me that there's not a lot of fear. It's just a knee-jerk reaction to a headline. So if you turned off all the radios and TVs and just invested based on P&Ls, what would you be doing? And that's what you should be doing.
Okay. All right. We got some stocks in the chat that folks are interested in here. So let me pull up our very active chat here. And they were looking at some spreads in Booking, the old Priceline. Let's see what you had on the radar for that. And let's see what else is. So let's start with BG and Booking.
Booking.
Yep.
Yeah, I got it. So Booking has been broke out on the last two earnings ago and has been trading above that neckline. So if I were to sell puts or put spreads, it would be hiding behind that for sure. But this is the mother of all momentum stocks. Just changing the headline. The ticker from the old ticker to the new ticker doesn't change that fact. So I like it fundamentally. So on dips, I would be selling puts or put spreads, but definitely I would want a giant buffer. So this is a stock where I don't like to trade the weeklies or short term. I like to sell the risk way out in time. And if I wanted to take an upside position, I think I would follow it on a breakout above 2160, because then it'd be a cup of handle-ish situation. So above 2160, I'd probably buy or calls or call spreads.
Okay. And Rob Hood, hopping in here. I'm sure this is one you don't follow a whole lot. Wing, W-I-N-G. Does Nick see the trend continuing? This is Wingstop, right?
Nobody eats wings in a trade war.
No.
I don't. I've never been. I think I may have been once.
I've never been either.
Down this morning. Did they report earnings or something?
Where are they? Where are the Wingstop stores?
I
There's none in Detroit, is there? They out west? Are they out in your neck of the woods, Nick? Do you see the Wingstop?
I think one opened for a week and then closed. I'm not sure.
Oh, really?
I'm really not sure. I'm not the one.
There are some in the greater Detroit area.
There you go.
Interesting question here from Fuzzy in the chat here, and I think I have the answer. He asks if you trade individual stocks. I mean, do you have a Nick secret portfolio of stocks that you keep, or does everything you do in the options markets?
I don't play stocks anymore. I do use the options market to play my positions in those. So back to Wing, just to offer the line there. So it's 52 was a pivot, but it seems choppy. It rises and it falls, it rises and it falls. So, but it's upward momentum. So as long as it keeps going higher lows, I'm okay with that. But you have to know the stock, and I don't know why it's falling this morning. So.
Okay, so you don't know Wingstop at all. Let's just take a look at the Nick.
Well, the price action is predictable. So if you're trading it, it rises and then it gives back enough to where it keeps a higher low. So you can play that momentum. And if you use credit put spreads, you can do it. If you use debit call spreads, you can do it. Just know the levels within which you're playing. Higher lows are good. Higher highs are good. So it's a nice upward trend, and you can just play inside the channel.
Brad wants to know about Kohl's, KSS. This is one that has been defying gravity for a long time.
Yeah.
Although the last few days it's starting to look like it's broken, at least in the last week. Thoughts on KSS and the retailers?
Yeah, I am long it. I sold puts in it on the last dip, and I think it played out the long. There was a giant cup and handle on the weekly chart and several other shorter term patterns in KSS. So it prompted me to jump into it, and I can probably tell you what legs I sold in a second. So KSS.
When you're putting these on, and positioning yourself obviously to benefit if they go up, how low are you going? What puts are you writing on something like Kohl's?
Okay, so apparently
because you like to be safe. So
yes,
pretty far down, right?
So the idea of the way I would play it is, if I loved it here, I would love it 20% lower. So I sell a put 20% lower, and sometimes it's a put spread, sometimes it's a put with a short-term coverage on the put to kind of prevent the oh crap moment. So barely I close it. So I'm trying to go back in time to see. All right, I think October 50 puts, and I collected. I can remember it was over $1. I did 30 or 35 cents to close it and get out of it. So it was an easy win. So if I did 10, I made $700 out of nowhere. There was no money out of
You're just like a lottery corporation over there. You just write, tickets to everyone there.
Loser tickets.
Loser. Yeah, I know. Yeah. You really are. Like you're right. $50. I think that's $74. You're getting $1 for the 50. I mean, cha-ching.
but the point is, you do it on the right day, right? So I'll see if I can point to that day and I post a chart. So you don't just do it willy-nilly.
There's fear out there, so they'll pay you a little bit more.
There is fear out there, and you do your homework and you see if the fear is overblown. And you say, you know what? Yeah, there is fear. I accept the risk. It could go there, but if it goes there, I am a buyer. So if you do it on the day I just pointed on the chart, this is a daily chart of Kohl's, then you're going to get a premium that is hot. Too hot, overinflated.
Like hot premiums.
Yeah.
All right. Okay, Nick, what about the VIX? Do you play the VIX at all? I mean, here you have it trading up a couple dollars. And it just seems to me, just observing the VIX over the years, when you have these positions and you get the pop, look at it. It's already dissipated. It got up well in a 34 handle. What's your take on the VIX?
I've lost money trading the VIX even when I made a perfect call on it. Like I bought puts at the highest point of the VIX and I still lost money. So I just give up. Like if I can't do it when I have a perfect entry point, I'm just out. I do look at the VXX or the VIX futures to see if there's fear in the market. The VIX itself, it seems weird because the expiration on it is the middle of the week on Wednesday. So around expiration is always wacky. Like it'd be green on green days and red on red days. It's just too confusing. If I look at the VIX futures, which on my platform is /VIX, so VX, So that is a more honest way. And even the VXX in the short term is also a little bit more honest about it. So yeah, I don't trade the VIX because I picked perfect entry points and I still lost money on it. So I was like, yeah, I've got other things to do.
It's tough too because your strategy, incorporates, obviously you're looking at technicals, you're looking at different things, but you incorporate fundamentals too. I mean, you're buying companies that you believe, are gonna, or you're writing puts on companies that you believe are gonna be, or undervalued or potentially, not going to be undervalued at the point where you're writing the puts. Yeah. And there's no way to value the VIX. I mean, really, it's nothing there. There's no cash flows. There's nothing to value.
Didn't we just learn that it's a manipulated ticker? So I was like, no, I'm
the whole SBXY.
Right. And the whole mess there, something happened and nobody knows what they're not telling us what it is. I'm sure they know exactly what it is. So I'd rather do something else where I know there's not as much manipulation. So it's a well-organized market.
Well-organized. That's a good way to put about it.
Yeah. It's a well-organized
That's a good way to put it.
What about, here's a stock from TJ Mosley in the chat that we haven't talked about. And Dennis, remember Conrad you remember what he used to call it? Eaton Corporation? ETN? It's an easy one.
No, I can't remember.
Cheatin' Eaton.
Cheatin' Eaton. He didn't like that one.
No, he did not like it. Yeah, and like Lincoln Financial, stinking Lincoln. But take a look at this one. ETN. I don't know if you cover it.
No, I don't. I've never looked at it. So I don't know what they're doing this morning. But
down a few cents.
They need to hold a small pattern that they have going on here and see if I can trend it. I don't know anything about it, but they do have kind of like what we have in the market, some sort of a rising wedge, a higher low pattern that they need to hold. Otherwise, they're in danger. But if they bounce, they could have some sort of a opportunity above 81. But I don't know anything about it, so technically it could have a setup, but somebody would need to do homework on the stock itself.
Ladder. It's kind of like a head and shoulders on top of a head and shoulders here. It's a very strange pattern. Good support just at the $78 level. So Nick, we got you here just a few minutes going into the open here. Now, like how many, like Dennis, he's crazy. He trades like 40, 50, 60 positions. He trades the spiders. I don't know what else he's trading over there. Like how many positions do you typically have going on to an open like this? And
too many this day.
You're longer though. Like you're not day trading this stuff either. It's a time.
Well, I am forced to day trade, and I tell you why. I mean, I have more positions than I want to these days because I have a bigger audience and I don't want to not put my money where I'm saying most of the time. I don't want to write up an article and then not do it myself. And then if it goes wrong, they say, what did you do with this one? I didn't take it. I try to disclose when I do take it and when it's a request for somebody. So I usually don't want to day trade it, but if the profits come too fast, I trade daily. So I'm not a day trader where I need to liquidate everything, but I do trade daily.
He won't admit it, but like when I send him positions and stuff, he puts on the opposite position. And then
I sell you the
yeah, well, let me get my order in there. No, okay. Yeah. All right. So are you trying to repair longs here, cover some shorts? I mean,
my biggest disappointment. My biggest disappointment is getting out of Tesla early on the bottom when I noted overtly that I was long it, and then also going long gold. I don't get it. Why is gold falling and the dollar rising when we're into a tariff war? So that's about crazy. My thing.
Gold keeps going down.
Either I'm stupid about this or the market's wrong about it. So we will find out. So yeah, I am losing money in gold. And I haven't tried to repair it yet. I should. I've been like burying my head in the sand, but it's not a big position, but it's just frustrating me. Other than that, I played the fool's YOLO trade with all these Chinese high-flying companies, and it's insane when you put a trade on and minutes later, it's 300% more in calls. I mean, how could you not book it? So I do that daily. So I do have more positions than I want to these days, but nothing that could break the bank.
All right, one more for you from Hunter 69. I believe this is related to some news here. Twilio has been on the ZTE train here and everything. I mean, down $1.51 at 60.10. Looks like a lot of support here under $60. Unfortunately, it doesn't come down into the 58 handle. Looked like it broke out, but now it's breaking down. Any thoughts on Twilio?
Yeah, Twilio gave me a scare a while back. I sold puts into it in the 22, 25 level, and that one earnings report months ago, or maybe like 3 earnings reports ago, it crashed down to it, but I had protection. I ended up making money on it. So I do have good feelings about it, but up here, it's definitely not for me. It's too high. I don't know enough about their fundamentals to bank on it. And also, I think yesterday it was in CNBC, and one of them recommended it as a buy. So he's probably not a good start to his recommendation. Sometimes it's it's too high to chase, too hot to short. And I say, you know what, I missed it. I'll find better entry points. Not an obvious entry point for me. There's a big gap below. So I'm not saying it's going to that gap, but it's a very steep rising wedge, and it's definitely not an entry point for me.
Okay. I keep saying the last one. First Solar. I know
That's fine.
Yep. I know you dipped your toe in the water on that one, hit $50 yesterday. And I think I remember you selling some puts or putting a put spread on. That was a little bit higher, a little volatility, but has the time decay worked in your favor?
Well, the time decay is okay. The upside potential is not, but it's in a calendar. So I do have some losses, but after the calendar expires, when you do a call calendar, you buy a call out in time and you sell a shorter dated call at the same level. And this way, the idea is you want it to rise, but not too fast. So the first call that I sell is designed to die for maximum gains, and this will, and it leaves me long a longer dated call, and I could sell another call against it before the time expires to it. So I am in a slightly red position on that, but we'll see after the calendar expire, half of it expires.
Give yourself some time. We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Joins our show every Tuesday and Thursday to give us his technical and fundamental outlooks on the market.
Tuesday and Thursday.
Oh,
no.
I'm sorry.
But I will come Thursday. If
Tuesday and Thursday.
Where are you starting fighting for?
Just got a raise, Nick.
Yeah, hey,
right.
Where's the paycheck?
Maybe
I don't
we'll
get
start
paid for
having
this.
you
What
on.
are you talking about?
Hey, let's ask the chat. Who wants to start
All right.
having Nick on twice a week instead of
There
once
you
a
go.
week?
They love
Nick.
Nick's great.
Yeah.
Oh man, let me hold on to my chair here.
Nick, you can't answer sure thing when I ask who wants you to come back in the chat here, but
I was answering Hunter. He said thanks, Nick.
Nice, very nice.
All right.
Very nice. All right, Nick, have a good one.
All right.
Thanks for coming on.
Yep.
We will let you go here. S&Ps are hanging out. Dennis, 51.75 down 28. Kind of settling here. I mean, it's that 28.50. You see any moves in these stocks off the imbalances?
I mean, they're getting bigger. GE is now 304,000 to sell, so that's huge. Bob was 202,000 to sell. Twitter 85,000 to sell. You're gonna see Tech Week here off the open. Watch the first 5 minutes. If you start to see some bids for them, you start to see them start scooping some of these high flyers from before, it could be a repeat of yesterday where they come in and buy these things anyways. I don't know if that's going to be the case or not. You learn a lot more once you have the real buyers coming in at 9:30, because all it takes is one or two institutions to say, yeah, I want to come in, to these stocks on the cheap and I want to buy them. And like I was saying, I had a whole list going of stocks that were breaking out, and I was going to use that on the show here today. And now it's like with the market going down, that's kind of off the table. But if they go to turn, stocks like Autodesk making new highs, breaking out, beautiful breakup for Autodesk yesterday. Twilio, TWLO was another one, breaking out over 60. GoDaddy, GDDY, if that gets up over 75, that's off to the races too. The little ones, Etsy is still going. Roku has still been moving here and coming back with a nice chart there yesterday. I mean, Box, which is one spinner was talking about in the chat, had an awesome day yesterday. It probably would have been up here again this morning if not for this. So on pullbacks here, I think there's buyers below on these stocks. So I'm looking at this as an opportunity, maybe to get in on a stock like BOX, maybe to get in. If you're not in Dropbox, it's already kind of ran a long way. So maybe that's not the one. But some of these that just started showing some life yesterday, maybe, on the pullback here this morning, maybe they show life again. stick, and don't let them get away from you. Have your tight stops in there. Don't let, all of a sudden, it looks like, the market's crashing down. It's going to bring everything down with it. But if we show some strength, if we do find buyers coming in, I believe it will be in some of these stocks that were strong yesterday too. And that was a lot of those smaller tech stocks.
So do you go from looking at the stocks breaking out, a breakout level, to looking for support levels?
Not necessarily. That's the tricky thing too, is how much heat are you going to allow yourself to take on these things? So, you look at even something like an IQ, like look yesterday, this thing has just been in rocket ship mode. It's down $1.50 here today, but don't kid yourself. There's people who've been trying to short this thing, and you're probably going to be looking at this as pulling back here and maybe looking to cover. I don't think this is, it's down 3.23%. It's not out of the realm that this thing could go green again here today. I mean, it's been green every single day. So stocks like this on the pullback, maybe not a bad idea. Give yourself a tight leash though, because if they decide they're just going to whoosh and everything is going to continue down, like if the S&P is open and start tanking again, that's going to bring these down with it. So all I'm saying is, if we do, and that's all trading is scenario analysis, if we do start to see some life in the S&Ps, if the S&Ps look like they're stabilizing, if they look like they're starting to catch a little bit of a bid, I believe some of these smaller tech stocks from yesterday that were high flyers are going to take off again. I love that BOX one that Spinner was talking about here. It's down 40 cents here in the pre-market. But that was a beautiful chart yesterday. And, it's a little bit earlier on the move. You're not chasing it like you were with an IQ, so you wouldn't have to take probably as much heat. I mean, it was a huge move yesterday, but there's going to be support 26.5 to 27. So you're buying at 28. Yeah, you got to take some heat, but it's not necessarily like an IQ where you got to take like $2 a heat or $3 a heat before the thing turns. Something like this might be a little bit better setup.
All right, let's just talk about one wild child for yesterday before we wrap up the show. Mark Homer is talking about GEVO, GEVO. Big old move yesterday. I don't see. Wow, was this after hours? When did we get up here? Whew, I don't know.
Huge move.
Yeah.
Yes, that thing went nuts.
How do you approach something?
And it's up another $3. It doesn't even care if the market's getting hit. This thing's up another $3. These things are just, I don't know what the story here is, but when they go into rocket ship mode like this, I mean, they're hard to trade. Right. This is another, this is a whole other level above like the IQs of the world.
I'm not sure what the float is here. I bet you it's small.
It was one of those small float plays. This thing got to $21 yesterday. Is that right?
Let's see.
Let's look at the highs.
I do.
$21.
1.2 million shares outstanding. There you go.
Yeah, it's already traded 681,000 shares in the pre-market. This thing, is one of those low flow plays that just saying we see these every once in a while just blasting off yesterday. This thing could go anywhere. When the dust settles, it's probably, we look at a month and a half from now, it's probably back under $5. But these things go crazy, and it's hard to short them here because he probably can't hold through the heat. Or get a low kick.
Yeah, well, I mean, I guess if you're playing it from the long side here, I mean, the close is a long ways away at 1270, and huge volume poured into it yesterday. 94,000 shares traded on Friday. Over 30 million traded on Monday here. So 21 even. I mean, you could use that as a target. I'll just alert you here in the pre-market trading. The pre-market high is 1777, backed off $2 since then. So until you get to 1777 here, I'd be a little bit cautious. Coming back on the downside, this place is all over the place, or all over the map here. Yesterday's close at 1270. Could be a good target if you're using it on the short side. All right, Dennis, let's wrap things up here. Any changes in imbalances or any?
No, they're going to be weak. Everything is going to open weak. Look for what is going to be your leaders here. We don't know how this market's going to, but I'll tell you, there's going to be some stocks that actually do catch a bid. I'm watching all those same stocks that have been hot, and I'm looking at those at pullbacks here today as day trades potentially. If the market starts to turn, I think you might see some bids in some of the stocks I just mentioned. And especially I like that box one too.
Okay. All right. Let's wrap things up. Right. The Preview Wednesday show.
Well, I don't really know what's going to be on tomorrow's show. I imagine it'll be a lot of China trade war stuff again. The central banks are all meeting this week, the start of that conference. It was this morning. We saw Draghi speak already, Jerome Powell speaking today. So it wouldn't surprise me if we get some movement off of things that are said at that. But that's going to be it for today's show. If you want to catch the podcast, you can do so iTunes, SoundCloud, Stitcher, and TuneIn, or just rewatch the show on youtube.com/BenzingaTV. Thanks to our guest, Nick Chahine, and thanks to all of you who joined us in our chats today. Hope you all have a good rest of your morning, and we will see you guys on Wednesday.